Good morning, everyone. Welcome to Business Morning. It's the second trading day of the week, the 26th of June. I am boosting number 5. It's good to have everyone around to discuss what are the top stories in business and markets as we speak. And this is just coming through right now. Atlas Mara, owned by Bob Diamond, says it has increased its stake in Nigeria's Union Bank, this Tier 2 lender. Atlas Mara says it's increasing its stake in Union Bank of Nigeria by upping its stake by another 1% from 48 to 49.0%. The company will issue about 2.36 million ordinary shares as consideration for the UBN shares that has now been acquired, and the new shares will rank pari passu with existing ordinary shares of Union Bank of Nigeria PLC. Now, this looks like Atlas Mara will soon be a majority shareholder in Union Bank of Nigeria. That's the statement that's just been released this morning by Atlas Mara Limited. The statement says that it has increased its stake in Union Bank of Nigeria to 49%, and that is just about one step away from becoming the largest shareholder in Union Bank of Nigeria PLC. That is the story out of the global marketplace this morning. Atlas Mara is an investor, a strategic equity investor in Union Bank of Nigeria over the last few years to reshape one of Nigeria's oldest banking institutions. That's the story, and it's just breaking as we're letting you have it. And let's now get on to a bit more broader into the business world, in particular from the side of the government building and enabling business. Buhari's administration is now reviewing its enabling business environment program under the Presidential Initiative of PEBEC, which is the Presidential Initiative on Business, according to the Executive Order number 1 of 2018. That's what the government did yesterday. The Vice President sat with the organized private sector in an elaborate meeting to review what has been done under the Executive Order number 1 that was signed last year. The Vice President told his audience yesterday that what is most important is that we are on a journey of national transformation, quote and unquote, because what we're talking about is changing attitudes that have long been entrenched. The VP went on to say that we're talking about changing mindsets because it is not just about putting in place systems, it is more about changing the way people think. There were 6 directives that were contained under the Executive Order number 1 that seeks to address limitations that have been identified by the Buhari's administration in Nigeria's civil and public service systems. The Vice President therefore went on to praise what he calls the cooperation between the executive, the legislature, and the judiciary system, and between the federal government, the states, and the organized private sector, which the Vice President says has resulted in significant business law reforms. We're talking to one of the big shots in Nigeria's business law community from Templars this morning. Akwata is joining us within the hour to discuss part of this conversation more broadly in enabling business and Nigeria's stepping into the intra-Africa trade. That's just within the next 30 minutes. You want to stick around for that inciting conversations here. In the coming months, according to the Vice President, in his speech, he says the federal government will now tackle what he calls regulatory challenges and bureaucratic complaints of the private sector. The VP says we have significant problems in the customs service, number 1. And number 2, the Vice President says with the NNPC, it is an ongoing reform process. He says long and lengthy meetings are held with the NNPC and the customs and other agencies to change their mindset about how they do business. And that is what is now being pursued. So the Vice President concluded that we need some patience and time to be able to surmount some of the challenges in enabling the business environment. We'll talk more about that later on the program and in the days ahead as the administration begins to piggyback on the Executive Order number 1 that was signed about a year ago. Look at the markets. It is a bit of Well, we gained about 0.3% on the equity side of the street on Monday, the first trading day of the week, but that was very soft considering that the market really didn't move much, but thanks to Dangote Cement that moved the needle a little bit. Investors traded about $3.2 million of this bellwether, the largest company by capitalization of the Nigerian stock exchange. Look at the numbers. The all-share index was at 0.34%. We're still below the 38,000. We lost the 39,000 a week ago. And the equity cap is still below the 14 trillion naira threshold. In primary trading figures, now you look at the transaction turnover. That's the volume. That's what that gives you. 207, a very paltry transaction day for 3.42 million naira. That's about 9.4 million US dollars by some exchange rates and less than 4,000 transactions. And then let's move on to look at the 5 main sectors. Here we go. Despite the 0.34% gain on the composite index, the banking sector was largely flat, 0.05%. And you have, despite the buyings in UBA and Zenith Bank, $1.2 million and $1.1 million each. Then you find the consumer goods tapered down. Guinness lost about 0.5%. Also, its main rival, Nigerian breweries, almost by the same margin. Dangote Sugar lost 1.45% due to a bit of a profit booking. That sector was down about 0.2%. Then you have the industrial goods, 0.15%, looking red. As we saw, Lafarge Africa down 2.31%, despite Dangote Cement here at $3.2 million aggressive buying. Dangote Cement is just floating 150 billion naira commercial paper on FMDQ. The first tranche of that, of 50 billion, is currently on the market straight. That will be concluded before the end of the week, and we expect that to be listed on the FMDQ OTC Securities Exchange. This is the first time that Dangote Cement is floating a commercial paper on the market. This is Nigeria's largest company by market cap, and now trying to raise this money in naira terms locally to meet some of its short-term obligations. A bit of that conversation later with Damilare from FDC later on the program within the next 10 minutes. Hang around for that conversation. Then you find insurance, they're flat on Monday, while the oil and gas was deeper, 2.58% in the negative territory. So let's check with the oil and gas stocks and see how we ended with that. Seplat brought the oil and gas sector on its knees by 5%. That's the bellwether. Investors still taking profit on Seplat, the only EMP on our market. And Owando lost 3.05% on 6.222 million ordinary shares at 6.35 naira. But Seplat was where investors were still booking profit because of his very nice numbers that the company reported at its annual shareholders meeting held recently. So, but Seplat is below 700 psychological price level there. Total at 193, Eternal Oil at 675, unchanged. Japol lost 4.26%, a bit of a pullback in that amid a very small cap company in the oil maritime services, 45 kobo at the closing bell on Monday. The unlisted securities market, move on with me to see the unlisted securities market. That's the NASE over-the-counter was unchanged. The USI index is now below the 660 level by a few notches, 659.16 to start the Monday. Lackluster. If we change to the second page, you find the transaction table, just about 32,000 transactions, 32,000 unlisted shares traded for 4.24 million naira, and the needle remain unchanged. And finally, you're looking at the fixed income in our market review, a bit of a lackluster Monday as the central bank yesterday plunged the open market operations bills into the market and taking off 207.4 billion naira off the market in dated treasuries, 87-day to maturity and 213-day to maturity worth of bills at a spot rate, a stop rate of 11.05 and 12.15%. The treasury bills market, 84.42 billion naira in total via the FMDQ OTC Securities Exchange. Those are the foremost actively traded treasury bills. It was a bit bullish on the secondary side, but a bit negative on the bond market side. So let's take that away and show you the Naira paper. Today, we're looking at the day before the debt office rolling out the reopening of those 3 dated papers. That will be a total of 60 billion naira. That will be tomorrow, the 27th. Before that, that's a very small package from FMDQ in terms of what traders did. It was a bit of a bearish sentiment, 8.86 billion naira in total in 25 transactions. Those are the most actively traded. Investors were asking for higher rates on naira bonds at the market on Monday. So that's a bit of a snapshot of what we have for you. But don't forget that we told you yesterday the Nigerian Stock Exchange has released revised market structures covering equities, ETFs, and fixed income. And we said we're going to be explaining this for you as we move on. This new structure for the stock exchange will be effective July the 2nd, and we're just finishing off the final trading week in June. The stock exchange says the market structure includes regulatory and technological changes in order to drive a more competitive market for investors. The stock exchange is looking for a level playing field for all market participants and allows for deploying new strategies. The hybrid nature of the market, according to the NSE, will facilitate reduced spreads for traders, best execution, and boost liquidity. If you trade in markets, that's what you're looking at. You're looking at your spread, you're looking at your liquidity, and you're looking at execution that will make everything easy for you. So what's going to be new moving forward? What will be new is that the stock exchange now introduced what you call a pre-opening and pre-closing auctions, which is called the imbalance sessions. That will be between 9 and 10. As we speak now, from the 2nd of July, the market will be trading. So the pre-opening imbalance will be between 9:30 and 10 o'clock, and then the final minutes of about 2:20 in the afternoon is when the stock exchange will allow the imbalance period to come in so that all traders and market makers can sort out their books and provide all the balance. When the market closes at 2:30, you have a full figure of what the trading day look like. So that's on the equity side. So the exchange is looking at what you call an efficient price setting mechanism by allowing what you call the imbalance period being introduced into the market. Then on the side of the exchange, traded funds are what you call the derivatives. The equity ETFs, which are listed, a few of them on our market, will mirror the equity market structure. The stock exchange says it will allow the same limit in terms of trading, a 10% limit up or limit down. That's what LULD stands for, limit up or limit down. That is the top limit you can go when you move in prices, with of course the new set of number of shares that was set a few months ago, 10% up, 10% down for the entire trading session. That will apply also to ETFs on equity side. For the fixed income equities, fixed income ETFs, I beg your pardon, for fixed income ETF, there will be no limit to the limit up or limit down in terms of pricing, so you can move the price of those bonds that are listed on the stock exchange. Then finally, you have the incoming commodity currency ETFs and other underlying securities that the stock exchange is aggressively pursuing. The stock exchange is working to float the Lagos Commodity Exchange, which is being pursued aggressively, and that is coming up in due course. About 50 billion naira is what that market will be in terms of setting it up. There will be no limit as well in terms of how you can move prices. All that will be seen in the future, but we'll get more clarity on how this work out from the 2nd of July. That will be the first trading day in the new month. Let's give space to discuss what are some of the burning issues in the commodities space, in particular relating to Nigeria's commodities market. We have the Dangote story, and of course the electricity transition market is one key issue for consumers in the Nigerian space. Sit down with me. Let's have this discussion with Desola when we come back. She's joining us from Financial Derivatives Company. Welcome, everyone.